Listen up, ladies and gentlemen, because in this video, I'm going to be showing you that XRP's expansion phase is most likely around the corner, where we may see a monster increase in the valuation per XRP, not based on fundamentals, but based on technical analysis. Right off the bat, I'm talking about a $5 to $10 minimum target. It may sound crazy to you, but not to me. Now, there are, of course, many factors, mostly due to Bitcoin's current position in the market as the main control factor, and also the possibility of a reversal in the Bitcoin dominance that I won't be discussing in this video. Lastly, this is most likely going to be achievable by pulling observations from a technical analysis strategy known as the Elliott Wave Theory, which I specialize in, that takes the fractal nature of how the markets work and what is known as waves, as you can see here by the letters and numbers that create these waves. The first thing we need to address, however, is how in the heck is this going to be even achievable with the current market cap in mind? Many people talk about the market cap with XRP, even at, let's say, $10 per XRP, is not feasible because it would be at $1 trillion market cap. I believe the market cap is mostly a myth in this current stage of the cryptocurrency narrative that can be compared to Bigfoot photos with 1 megapixel resolution circulating around the internet. It's an incredibly misleading metric, ladies and gentlemen, and when looking at a coin, most people start off by reading into the market cap and how it can represent how much money has been pumped into a coin like XRP. Everyone falls for this misconception in the beginning, including me. Most connect cap in market cap with an upper limit. The full term is market capitalization, ladies and gentlemen, not cap like an end cap or a limit. It's just a number, remedial math at most, not a magical or theoretical limit. We aren't talking about the speed of light here in physics. There's no cap. One example is Apple. Many years ago, when you were probably not alive, was trading around $10 per share, and people with real intention said that it was impossible to hit $1 trillion market cap. Now that has been well beyond achieved and is now even being discussed by everyone like it could have been achieved in the first place. That alone tells you that emotional baggage attached to market cap is usually what creates a limit or ceiling. Here's also something that I found on the internet that is a perfect visualization of the world's money in comparison with cryptocurrencies using the 2020 data. If you can see, cryptocurrencies are at the bottom of the bucket. So what's the point here? Cryptocurrencies, for the most part, is sitting at an infant stage. That's the point. The average person alive on this planet probably knows what an iPhone is, but do they know what a Bitcoin is? Well, this shows you that visualization. You'd be surprised. Many people do not know even what a Bitcoin is. Like, many people also think that English is also the most spoken language in the world, which is not. We're talking about military spending, US budget deficit, number of billionaires, and even gold having a much higher number than cryptocurrencies. Sometimes we just really need a visualization to really understand that crypto is in infant stage. Market capitalization is a metric used on companies, okay? It's silly to use the same measuring stick on a coin. Ripple as a company would be measured with market cap, not XRP. Market cap is calculated based on the current price, and that price is predicated on supply and demand, ladies and gentlemen. Market cap is less of how much is this coin collectively worth and more of how much is someone willing to pay for a coin today. So it's not even close, not even in the same ballpark. Market value is more of a reflection of popularity across the coins. People focus on this more and talk about the quality of the coin more than anything else. When you talk about Bitcoin, for example, you're most likely going to associate Bitcoin with a high or large cap with no real intention of really knowing what the market cap even is. Most people just categorize that way. The market cap concept, it was mostly used because it was the only way to measure it when there were not many coins back in the days. Utility, on the other hand, will determine the price with crypto like XRP, not limited by so-called market cap. Now, I'm not saying market cap is something you just toss aside. It's about learning to realistically value things by market cap that had always been a valuable skill in this market because it is still relevant, but used for the wrong purpose in the cryptocurrency markets. So with that being said, let's talk about how we can achieve those targets, and let's go back to the chart here. XRP has been in an accumulation phase for the past 7 to 8 years alone. That alone makes XRP being one of the most accumulated coins in the market. For one, accumulation is instantly a sign of health. For what it's worth, it has gone through a lot of bad times while sustaining the price floor for the past 5 or 6 years alone, with the SEC case in mind with the protected bottom. I don't know if that's something that you want to believe in, but I would say that is called denial at this stage. And with all of that in mind, this can be translated into waves that is presented to us when using the Elliott Wave Theory. Now, for those that are new, the Elliott Wave Theory is a technical analysis method to use to predict financial markets by identifying repetitive wave patterns in market prices. It suggests that market movements follow a series of 5 waves that move in the direction of the primary trend, followed by 3 corrective waves. These are fractal in nature, ladies and gentlemen, meaning they can be identified on various time frames. The higher the better, like we have here on the daily or weekly chart. This helps us forecast not only the market direction, but also identify potential price targets. In this case, we're seeing a possible $5 to $10 target using the Elliott Wave Theory. Now, the Elliott Wave Theory has a bunch of patterns, rules, and guidelines that I won't be discussing too much in detail in this video, but I've done all of the hard work for everyone. And with this current setup and with the observations of that 7 to 8 year accumulation, that pattern can be translated into what is known as the triangle pattern. This is going to be important. This is a sideways structure where an accumulation pattern before a breakout happens, like I mentioned. Simply put, it's a breakout pattern that occurs in wave 4s or B waves of corrective waves, or in complex patterns that I won't discuss here. That's fantastic. The fantastic thing about the Elliott Wave Theory is that it also provides us with boundaries known as invalidations. If a pattern is invalidated, it gives you as a trader the probability that the original intended pattern may not be playing out. So in this case, we have the invalidation of the triangle where the subwave E going past that previous subwave C is going to invalidate this possible triangle, giving you that not only risk reward possibility that you should be getting out of the trade, but giving you a high risk reward possibility that this breakout may actually be playing with the invalidation in mind. So with that being said, if we're in a current position of a wave 4, with taking all the previous data in mind, and we're in a 7 to 8 year accumulation and it has been built with a triangle, we're talking about a very high probability that this breakout might actually happen. We're talking about already 3 retests of this triangle top pattern trend line of the BD trend line that could be a breakout to the upside. Now, if this breaks, we're talking a massive breakout, ladies and gentlemen. I don't know if that's going to be a massive breakout right off the bat, but I'm telling you that there is a much higher probability with the data given with conviction that the move to the upside is a much higher probability than going down. And if it does in the case go down, which can happen, at least we know where the invalidation of the triangle is, ladies and gentlemen. So hopefully that was helpful. I am really expecting this possible wave 4, 7 to 8 year accumulation possibility of an upside target around $5 to $10. And this target is achieved by using another strategy known as the post triangle thrust measurement. I won't go into that, but you use the widest part of the triangle to measure the possible target pattern that is going to be measured at the apex or the breakout of the triangle. So that is just one way of doing it. And we're talking about just the conservative targets. I'm not talking about the possible targets over here, but I don't want to piss off anyone talking about the market cap again, but that was my explanation of the market cap and the possibilities of the targets based on the accumulation and also the Elliott Wave Theory. Hopefully that was helpful, ladies and gentlemen. I'll see you guys in the next video. If you guys have any questions on this, please write them in the comment section below. I'll be happy to answer them. Thank you very much. Bye-bye.